Are you ready to make the most of your oil and gas mineral rights? Welcome to the Mineral Rights Podcast. Get the knowledge and resources you need to manage your minerals and royalties. Here is your host, Matt Sands.
Hello and welcome to the Mineral Rights Podcast. I'm your host, Matt Sands, and I'm joined by my co-host, Justin Williams, and we're here to help you make the most of your minerals and royalties. In this episode, we're going to cover mineral rights news for November of 2024. And Justin, like we were talking before we hit record, it's been an interesting last month or so with the election. Thankfully, that's in the rearview mirror. When you're listening to this, it's going to be after the election. So, one way or the other, regardless of which side of the aisle you're on, I think everybody can agree that we're glad that the rhetoric is over and now we can just kind of focus on moving forward. But, certainly interesting stories this month on kind of all aspects, really innovative technologies as well as a lithium update. And then, of course, how the presidential election outcome is going to affect oil and gas and minerals and royalties. So I'm sure that's front and center on everybody's mind.
You said it, man. And our first story here is something that relates to cryptocurrency. And it was just a matter of time before it really kind of overlapped with the minerals world. And it appears that's happened. So the tokenized investment platform Elmnts is launched on Solana, aiming to make it easier for traders to invest in a range of funds backed by mineral rights royalties. The platform has launched one fund with plans to add more soon. There's a quote here that says, "Our vision is to bring liquidity and accessibility to high-yielding assets that are otherwise hard to access." And this is from the Chief Product Officer, James Pacheco. Mineral rights are a perfect example. They generate predictable long-term income through oil and gas royalties, but very few people even know that they exist, much less how to participate. And so, Matt, for those that are familiar with cryptocurrency, it's alluding to basically it being a tokenized fund that operates much like other cryptocurrencies. And it's a tricky world right now. We were talking before we hit record about how, the stock market was also a victim to a lot of the scams that go on, a lot of the pump and dump. And crypto is new enough that they're kind of going through that transition. And the answer is for this world to be regulated, which will bring some standardization and some security to investors. But it is interesting to see that cryptocurrency and mineral rights are crossing paths.
Yeah, and we've alluded to this. It's been a couple of years since we talked about this last. I think probably 2021 when there was the big crypto boom going on. And we were talking about the blockchain and, what if they were to put the mineral rights ownership on the blockchain to where that was your ledger of who owned what. So there's certainly some improvements that could occur. I mean, as everybody knows that's listening to this show, minerals and royalties is an opaque market. It's very difficult to know exactly who owns what without it running title. And so then there's the possibility of that like opaqueness and like ambiguity that kind of puts a shade over the potential of this industry. If you could, get back to the source of the truth, if you had run title on a mineral tract, and then exactly who owns it. That's recorded on a distributed ledger, which is what the blockchain is. Basically, you're not relying on one single person to keep the ledger of who owns what. And this particular fund, I don't know that it's going to be a good investment. So not at all recommending people go out and look at this and try to invest in this at all, because I think there's a lot of, in my mind, red flags that kind of pop up in looking at this. But in concept, I think it's a really interesting idea. And, certainly if you can make it more available, blockchain technology for those that are tech savvy, you can find it very easy to go and buy a token, which may represent a share in this mineral fund. And so it becomes more democratized for people. If you had the ability to buy this on your Robinhood account, for example, then people could go and directly invest in minerals and royalties through these funds in a lot more open manner than it is available today. So a tokenized fund, this is what this is, like you mentioned, Justin, and probably be good to go through this because I had to refresh my memory, honestly, on what exactly a tokenized fund was. But basically, that is a type of investment fund that uses blockchain technology to issue tokens that represent ownership in the fund. So these tokens are digital assets that can be bought, sold, and traded like other cryptocurrencies. So think Bitcoin, but this case, these Bitcoins represent a share in this mineral fund. So if you think back to the history of the stock market, like you mentioned, Justin, I think that's a really good analogy that, back in the Wild West days, you had paper stock certificates, and it was hard to determine, was this a legitimate investment or is this a piece of paper that's worth nothing? And so you had SEC that was formed to regulate and to make sure that if you were to buy a share in a company, that they follow certain rules and regulations, and that's a legitimate investment. It's not a Ponzi scheme, those types of things. And so that has morphed over time to now we have electronic certificates. So if you buy a share of a publicly traded company today, you don't get a paper certificate in the mail. You have a electronic certificate that is held, quote unquote, by your brokerage company. And then you have a central register that the company maintains of all the shareholders. And so you're relying on that central register of all the people. Okay, you own 100 shares in Apple, let's say. And so you're relying on that register to say who owns what. Well, by tokenizing the ledger, basically that you take away that person that is the maintainer of the ledger, and it's now a public distributed ledger so that it's auditable by anybody. It's out there. It's open source, so to speak, and it's kept on the blockchain. So in theory, there should be more transparency. You'd know, okay, that person actually owns those 100 shares and that they're selling to me because I can look right here on the blockchain and it says that they're the owner. And so that's the benefit of doing this that way. But to your point, Justin, I think really a lot more regulations need to be put in place around these securitized type assets, because ultimately, I think it could be argued that some of these types of cryptocurrencies, now in this case, I can't say one way or the other, maybe they went through the SEC and it's an actual registered security, but it smells very much like a unregistered security, and that you don't have the SEC kind of overlooking that. So it's a Wild West, I think, still. But in principle, I think it's a really interesting idea. But in this case, you'd have to really trust this Elmnts company that they actually own the underlying mineral rights and royalty interests that they purport to. And as anybody that's on this show knows who owns minerals and royalties already, extremely complex, very difficult to do for your property. And you're going to be relying on somebody to do that and trust that they're actually investing in minerals and royalties and it isn't a Ponzi scheme. So, but I think it's an important step in that direction. You know, who knows, maybe 50 years from now, we'll be talking about, well, I need to go sell my minerals. I need to look on the blockchain to make sure that it shows that I'm the correct owner and then I can sell. And that's the way that you would transact, is through the blockchain, you know, through a distributed ledger like that. But yeah, a really interesting story.
Yeah, you said it, Matt. It's interesting to see this new technology kind of starting to be applied. And the technology is the interesting part. You know, the pump and dumps that happen in the crypto world, this will all be eventually regulated, and I'm sure it'll be a more secure thing. But something interesting to mention, Matt, even before the stock markets, property titles were something that all of these issues existed in. You know, we used to take a twig and break the twig, and each party had one side of the twig, and if it went back together, you own the property. And then it became deeds, and you know, multiple people would sell or the same property to multiple people. So then it became the first to the courthouse. And so it's an interesting thing. It's part of human evolution, and there will always be some level of trust, Matt. But this makes it public, easier to see, and easier to verify that trust. So maybe you trust, but allows you to verify.
Yeah, that's a great point. Trust but verify, I think, is the takeaway there. All right, so this next one, Justin, is really interesting. SWA Lithium and Koch Technology Solutions signed license for Arkansas DLE project. So the article mentions a quote here: SWA Lithium, the joint venture between Standard Lithium and Equinor, which is developing the Southwest Arkansas project, said Monday, October 28, 2024, that it had been licensed by Koch Technology Solutions to deploy and use KTS's Pro Lithium selective sorption technology at the JV commercial plant for the SWA Phase 1 project. And again, just to refresh everyone's memory, we've been talking about all the lithium development and projects going on in the Smackover Formation in Arkansas. And this is the latest in that next step in the evolution of that industry there. And this basically will allow them to use this technology to build this lithium production facility. And this is going to go in south of Louisville, Arkansas, for those of you who are familiar with the area. And apparently, this gives them a few unique rights as far as using this technology. So they can use the technology for the lifetime of the first phase of the project, and then they have the option of utilizing it for subsequent phases. And it's an interesting thing I saw in there. It says it looks like that gives SWA Lithium exclusive use of this technology in the Smackover Formation. So this is interesting because I'm sure there's like some initial phase. Once you're beyond that, then anyone could use it, because I would think Coke would want to be able to sell this technology to all the different operators out there. But it seems like that gives a little bit of a first mover's advantage to SWA lithium in using at least Coke's technology. And then it did also claim that it will basically be guaranteeing a minimum lithium recovery rate of more than 95% from brine. So apparently this must work if they're going to be making that claim.
Yeah, you said it, Matt. And, it's interesting. It links into what we had talked about previously with the operators have put a lot of investment into the technology of pulling that lithium up. But you can pull it up, but if you can't extract it into a usable form, it doesn't do a whole lot of good. So interesting to see that there's evolution here. And yeah, it makes sense that there would be some kind of guarantees, and that folks would be willing to pay for locking that in so that they can be part of the evolution of this process.
Yeah, definitely. And I think, this is sort of a little bit more details that we've talked about this project. Actually, in the October news episode, we mentioned a little bit about the next phase and like the government funding that's going towards these lithium projects. So it's certainly moving forward. I know that everybody who owns minerals in Arkansas is patiently waiting for the Arkansas Oil and Gas Commission to set the lithium royalty rate. So that's still in progress. We'll certainly be taking a look at what they come up with. On the one hand, mineral and royalty owners are arguing for a 12.5% royalty, which is similar to oil and gas. And then on the other side, their operators have proposed a 1.28% royalty, which is more akin to the brine mining, which is existing and has been going on for a long time for bromine in Arkansas. So that whole concept is not new in Arkansas, but the lithium aspect is.
You said it, man. All right. Last but least, talking here about the election. And Matt, this is something that I think a lot of people are, especially if you're tied to oil and gas, it's easy to think, oh, this will have a major impact. But truthfully, that's not what's being said. It appears that the kind of prevailing idea is that the U.S. election outcome really won't have a big impact on commodity such as energy, metals, and grains in the short run. But oil and natural gas could be influenced over years based on the candidates' policies, according to their opinions and what they might do. But it's not something we're going to see a short-term impact on. But as we saw with previous, it will have a long-term impact into what their views are, what they're allowing to happen in the industry, and where their philosophies are in that. With Trump winning, Matt, it'll be interesting to see what comes. I think a lot of people are expecting there to be a major shale revolution again, and I don't know that that's going to be the case.
Yeah, I think the win for Donald Trump, it's just going to provide more encouragement for drilling. Certainly, he's been very outspoken about being pro oil and gas and sort of unleashing the potential of the U.S. energy industry on the world and saying, okay, we want to encourage LNG exports. I think the one benefit of having Donald Trump as president is that I imagine the LNG export ban that the Biden administration enacted will be reversed, once he gets into office. And so in my mind, that'll kind of open up that process. There's been a delay at this point now for probably 6 months or whatever by the time we're recording this. And so those projects have been kind of mothballed or held idle, and they're not going to be moved forward unless they can get those permits. And so now if they can get the permits, that means those projects will move forward, and it should allow additional export capacity to come online, a few years from now. So I think it would be bullish from a natural gas price perspective, because that would represent additional demand for natural gas. Like we've talked about, how that's really a big driver is LNG export here in the US to sort of normalize prices with Europe and things like that, which have, for natural gas at least, have been historically a lot higher than here in the US. So I think that's a positive. Otherwise, I think there's some rumblings about, well, is he going to shut down the electric cars and EVs? Honestly, with Elon Musk's support and his potential role in the administration as a efficiency expert or whatever they're going to call it, is that I would think that he's going to leave the EV markets alone, because that would directly impact Tesla negatively if he got rid of the tax credits for EVs and things like that. So I would think if you're thinking about buying an EV, I don't know that you need to go out and rush and buy one, because Trump's going to reverse the tax credits, I would imagine, to help his friend Elon Musk out. He's going to extend those. So if you're looking at leasing an EV, you probably have a little bit more time. You don't have to scramble for that. So I think that would probably be the big takeaways, like in the short term. But, long term, ultimately, the thing to think about with these commodities is it's supply and demand, right? So we have tremendous supply in the US to the extent the government sort of stays out of the way. That's the best thing that either administration could do, right? Is that they just sort of let the industry and sort of the capital markets decide what is right and what's a good investment and what should be done. And then, make sure that we're protecting the environment to the extent that we're protecting the air and water and things like that, which need to be done. But that's a limited role, I think, in government that they could play, and otherwise just stay out of the way and let the industry do what it does best, and that's to innovate and to responsibly produce oil and gas here in the U.S., certainly more responsibly than other countries, which if we shut down the industry here, we're relying on imports of those countries that are honestly not going to be as environmentally conscious as we are.
Yeah, you said it, man. I think that's a good way to put it. And it's easy to get caught up in the hype of the divisiveness that's going on. But like you said, the capital markets truly are going to make the major impact, supply and demand. And it's going to be less to political wins, not that there won't be some help and some friction from it. All right, man. So rig count. Let's talk about it here. And not a whole lot of movement, which is a good.
Yeah, not a lot of movement. Like we've kind of said, we're kind of in this, I think, status quo mode now for the foreseeable future, as long as oil prices don't change drastically. The oil did drop here recently at the end of October. We saw kind of a big drop in crude oil when the response to the Iran bombings was limited by Israel. I think there were a lot of the geopolitical uncertainty was built into the market, was baked into the market to where they were anticipating a really strong response from Israel, which maybe would escalate that conflict and cause disruption in Iran production of oil. That didn't happen. They just really targeted some key military installations and really made it a more surgical response than a widespread type of a thing. And they did not touch any of the oil production or any of that kind of thing. So I think from that standpoint, the markets initially reacted with oil selling off pretty significantly by more than like 6 or 7%, I think, on the beginning of the last week in October. But then now it's kind of creeping back up close to $70. So I think we're in that position where as long as oil stays around 70, this rig count situation will probably stay the same. But Justin, you want to break down kind of where we're seeing any small changes?
Yeah, absolutely. So we lost 2 rigs in Louisiana. We gained 1 in Ohio and Oklahoma. Looks like lost 1 in Pennsylvania. And yeah, that's not a whole lot of change, but Texas has remained stable at 283 rigs and seems to be just kind of clicking along.
Yeah, it's just kind of humming along. We're at 568 rigs as compared to 600 a year ago, which is only 32. So it's, less than 10%, around 5% difference. And so it's sort of stabilized. I think in the past year, we're sort of seeing that, slight trickle down, but, we're at the point now where areas that are profitable to be drilled, or at least that the anticipation that they'll be profitable when the wells are completed. So, we still see, for example, 33 rigs in the Haynesville, which is in like Louisiana, East Texas. Marcellus, which is Pennsylvania, has 22 rigs. In those areas, I think we're seeing wells get drilled but not completed because of natural gas prices being so low. So what they're doing is anticipating the prices are going to go up next year with LNG export capacity coming online. And certainly we're seeing natural gas about $1 more right now than it was probably 6 months ago. So we're almost up to $3 an MCF, which is great. But really they need it to be above that in order for those wells to be economic. And so I think they're just kind of biding their time, drilling, reinvesting cash flow and drilling right now, but then waiting to complete those wells until prices recover so they can take advantage of those better prices. So yeah, it would be interesting to see if that continues. I think that's the bright side of this, is while oil has come down a fair amount over the past month or so since we last recorded a news episode, but natural gas has come up quite a bit, which is great.
You said it, Matt. And when that kind of wraps it up for our November news here, we had some really interesting stories some different stories, and then some updates on lithium and, of course, politics.
Yeah, but hopefully it'll be less talk of politics here now that the election's over. But, I guess it's something you just got to deal with. But anyway, thanks again for listening, and we'll catch you in the next episode. Thanks, Justin.
Thanks, Matt.
Thanks so much for listening to the Mineral Rights Podcast with your host, Matt Sands. Don't forget to subscribe and share at mineralrightspodcast.com. The Mineral Rights Podcast should not be construed as investment, legal, or tax advice. All information is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy.